All right. Good morning, everyone. It's Thursday, January 16th, 7:30 a.m. And again, if you are watching this video for free on YouTube, we have a 50% discount special still running for our Advantage membership. This is only for first-time members, and it only applies to 1 month and 3-month memberships, okay? So you cannot get this for 6 months or a year. That would be unfair for our current members, but you can just get this to try out our membership. And then later on, if you like it and you see the fruits of the labor that we put in, then you can stay longer at full price. But for now, at least you get to try it at 50% off. This is our New Year's special, okay? So that's $50 for 1 month and $150 for 3 months. All right, so get it while it's hot. Okay, so let's get to the Bitcoin analysis, all right? Now, to my Advantage members, I did a video last night and I said that for the most part, okay, we were basically traversing in and around this range, this low of about, $8,600 and a high of about, let's just say $8,800 or $8,750. Okay, so that's really the real range, that $250 range that we're kind of moving sideways in, all right? And now what we see, folks, is on the 15-minute time frame, a double bottom being created, right? So remember, double bottoms are essentially where price kind of hammers a certain level, comes to it, creates a bottom, goes up, and then comes back to that same level, whether it's a higher low or same low, and then pushes up higher, okay? But the double bottoms are only validated when the first key high between the two bottoms is broken, like this. Okay, so this is actually a valid and completed double bottom, okay, because we've already exceeded that first high between the two lows. All right, now this is a positive sign because what I see now is this area as resistance right here. I would not be surprised if price comes back to retest this area and then starts moving up. Okay, that's what I see on the smaller time frames. All right, we obviously had this big trend line at play for since January 14th, right? And that was actually breached a little bit. So this was a bit of a cause for concern, but nothing too serious, okay, when you start zooming out on the higher time frames. Because when you pull this out, right, this is your demand block right here from the 15-minute or even the 1-hour time frame, okay? You can see that every time prices come close to this area, which is this demand right there, right there, and then right there, and then right there, all it's actually doing is creating higher lows. Now, obviously the trend line has been breached, but the fact that this is pretty much a higher low still gives me the idea that this is still a strong trend or a consolidation that's happening, okay? To me, this does not look like distribution. Again, I did a video yesterday morning on distribution, and I helped you guys understand that when it comes to distribution, what typically happens, okay, is the level below, all right, keeps getting hammered upon because what's really happening is that demand is weakening right here. So what you would have seen is a low like this, and then another lower low like that, maybe another equal low, and then a deeper low right there into the demand. And that would tell me that this whole thing right here was a cluster of distribution that was happening, okay? But in fact, that's actually not what's happening. And it's actually visible more so on the higher time frames. And this is one rule that we have in our community for new traders or traders who are just sort of building up their experience is do not focus and trade off the 15-minute chart, okay? The reason I look at the 15-minute chart is to show you the minute details of what exactly I'm seeing. For the most part, I'm looking for entries and exits above the 1-hour time frame. So when you start sticking to 1 hour and above, I promise you your life will get easier, okay? All right, so here we have another thing that was breached, which was this ascending trend line right here, this trend line right here, third touch right there, fourth touch, and then boom, broke down, right? And so now we're basically coming back potentially up to that trend line, and maybe we might get rejected, okay? That's a very high possibility, right? But what I'm seeing is something like this, okay? So we know that that trend line was breached, all right? But we also know that we have a double bottom right here, like I showed you on the 15-minute time frame. So that's a positive sign, okay? Not only that, we're actually seeing volume slowly increase. Now, I know it's not visible that much, but from here, it's kind of going like this, okay? All right, so what we now can ascertain from that is that there is basically a pennant or symmetrical triangle right here forming, all right? And that pole for that pennant comes from here, okay? So this pennant is almost the size of, let's see how long it is from this price range to this high. Okay, so that's about a $840 move or so. All right, the total move. It's probably a little bit lower. Okay, let's just say $810. Okay, so if you know something about bullish pennants, it's that the measured move from that is to break out the move and you just put the flagpole on top. Okay, and guess where that takes us? It takes us right around 96.50 or so, all right? Which happens to be, all right? It happens to be the large EQ of this area right here, okay? So what we can say is if this is a consolidation happening before an up move, right? It could potentially take us to that $9,500, $9,600 area. And my targets in this box are a little bit more reserved and conservative, which are anywhere between $9,000 and $9,300. Okay, so you know, again, if you want to aim for higher targets, that's your prerogative. But that's kind of what I'm aiming for. You know, right in the smack dab middle of this area is where I feel a little bit more comfortable. So if I even draw a fib right there, right, the 50% you can see is right there around 94.30. So just below that, say $9,400, $9,300 is where I'm looking for my targets to take profit. All right. And again, if you are not part of the Advantage community, we took this long right here from about 82.80, 82.90, way over here, and we're still in it. I did tell people that it is okay to take profits in this area if you feel comfortable doing so, or if you are holding a heavy position, or if you think that this is a top and you disagree with me. And folks, you'll always have people who disagree with me, and that's okay. Sometimes I'll be right, sometimes I'll be wrong. But for the most part, what we try to do is be more right often than we're wrong. And when we're wrong, we try to be limiting with our losses, and we're right. And when we're right, we try to increase as much of our winnings as possible, okay? So anyway, going back to that analysis, what I see is this pennant forming, and what I'm seeing inside the pennant is a ABCDE, which is your triangle formation, which is your consolidation before potential expansion after this consolidation. Okay, so whether you want to take this bull flag into play, I definitely see a contraction happening in this area, and that is mapped out by A right there, B right there, C, D, E. Okay, and so that expansion should take us to that upside into this blue box up here. All right. Now, again, I've stated before that this was the demand, right? This was your first tap into demand right there, higher low, and I'm hoping by the next couple hours we hit this area right here as the D. Maybe the E might be a bit more, higher low right there, and then push off. Okay, it's not necessary we have to hit the D right there, and then we have to hit the E right there at the bottom of the trend line. It could be very possible that we tighten up a little bit more like this, and then shoot off. Okay, so that's kind of what I'm seeing right now. And let's see here. On the 4 hour as well, you can even map out maybe a flag, something like this, maybe, like that, and something like that. Okay, that's sort of your flag, and then again, your pull. However you really want to draw it, there's a couple different ways where you can measure and outline this thing to be more of a bullish pattern forming rather than thinking of this as a distribution. Okay, all right, so now let's check out the daily. Okay, here's where things get interesting on the daily. I really did not like this hanging man sitting on top of the daily. Typically these mark reversals to me, and they're fairly accurate, but luckily, we have a lot of things going our way, which is that we've kind of breached right outside this trend line, at least on Bybit, and in certain other exchanges, we're actually consolidating right under that trend line. So either way, it's a bit of a positive sign that, we're right inside the trend line consolidating, or we're above it and we're holding above that trend line. Okay, so that's the daily chart. And the fact that we're consolidating right under this big, purple or blue block of resistance right here is another positive sign. Okay, so what I'm seeing is, a lot of good signs, a lot of opportunity for more potential upside. Now, if you are bearish, your chance of opening a short was yesterday, where you could have gotten in the short at, the highs of $8,800 with a stop somewhere up here, and you could have shorted all the way down to, $8,500. But I think the downside is actually a little bit more limited, and the upside is much more, I wouldn't say unlimited, but rather a bit more in excess, okay? Because we pretty much have targets all the way up into this blue block right here, right? And it could go as high as this high right here, around 10,500. And once we get above that high, I would probably, especially on a daily close, I would probably say for the most part, we're going to go higher, probably towards maybe 11,500, maybe 12.2, somewhere around that area. Okay, now I wanted to show you this quick Elliott wave count that I've done. And I'm not, someone who likes to trade off Elliott waves too much, but the reason I want to show you guys that count is because in this case, right, I only like to utilize Elliott waves when the wave count is clear. All right. When you start utilizing Elliott wave and you start forcing counts, that's where things get messy and you create more work for yourself. So the kind of trader that I am is more of a horizontals trader and just a raw price action trader. I really don't get into counts all that much. I like patterns here and there, but for me, it's mostly about price action analysis and then volume. And then sometimes I use indicators like watching maybe how the future premiums are going, the options premiums are going. I like to watch the historic volatility, which is this indicator right here, historic volatility. You can look this up, okay? HV. And then I also like to watch the money flow index, which the money flow is sort of like your RSI, but it's volume weighted. And what I mean by that is RSI only utilizes price action to derive overbought or oversold levels. The money flow index utilizes both the volume, okay, and the price action to determine overbought and oversold levels. And it also understands when a trend of bullishness is starting as per, the collective price action that's happened. So it's a little bit more useful at times than the RSI, but the RSI is very much more simplistic if you want to, keep it simple. And sometimes keeping it simple helps too. So anyway, going back to the Elliott wave count, okay? So what I see on the Elliott wave count is this, all right? After we sort of bottom down here, okay, we created another bottom, which would have been probably, maybe your where would it be? So A, B, C down here, and then you start your new wave count, which is your 1 right here, okay, your 2. And in this 2 right here, you have an A, B, C. So remember, again, if you're not familiar with how Elliott waves work, go to my education channel. And there's an Elliott wave video that I've done just for my Advantage members. Where is it? I don't know. It's somewhere in here, but I did it a couple months ago. And I explained the reasoning of how Elliott waves are used, why to use them, when to use them, how to use them. Okay, so anyway, let's get to the count. Okay, so 1 is right there, 2 is right there. And within 2, you'll always have an A, B, C, or you'll have an A, B, C, D, E. Okay, and then in the bullish waves, which are the 1, 2, 3, or I'm sorry, the 1, 3, and 5s, okay, you'll have a 1, 2, 3, 4, 5. Okay, so remember, the bearish, or rather the corrective counts, which are the 2s and the 4s, are always going to have an ABC or an A, B, C, D, E. And the bullish impulsive waves, which are the 1, 3s, and 5s, will always have a 1, 2, 3, 4, 5 inside this larger 1, or the 3, okay? So in this 3 wave right here, what we see is a 1, 2, 3, 4, and then the 5th is coming up here. So again, I stated the reason I believe that this larger blue 3 and then this mini count of the 1, 2, 3, 4, 5 all ends in this demand or this supply structure right here, is because that's probably the most amount of volume and resistance for big players to get in and out of the market, get into shorts or get out of longs, etc. Okay, just remember that, you know, whether you agree with certain price levels or not, just look to see where the most amount of price action has taken place, because that's probably where a lot of large professionals can get in and out of their positions. Okay, because remember, wherever price action spends a lot more time, that's probably where a lot of professionals can make larger movements of their money. Okay, you cannot sort of have a professional get in and out of a position, you know, in just one daily consolidation or one daily distribution candle. You know, that's just not how it works. It takes weeks of this kind of movement right here, or maybe even months sometimes, for reaccumulation process, or maybe even over here, which was, you know, a distribution process. Okay, so once you keep that in mind, you realize that, okay, well, if this was previous distribution right here, there's probably more supply sitting in this area. Okay, and for the most part, you know, the professionals, okay, are going to try to get in and out of their positions right in this block right here, and that's where we get our 3-wave pullback for a 4, which could be just on top of this consolidation. And then our final 5 would be up here, you know, in the 11,000 region, or it could be, you know, just as high as 10.4 or 10.5. Okay, so that's kind of my Elliott wave count. All right, I hope that makes sense. And then on top of that, as I've stated before, we are still on the weekly time frame, still pretty much trying to break out of this descending parallel channel. We still have about 3 days to go. So far, so good. Typically, when we see weekly candles like this that are bullish, you see them sort of pop off in the beginning of the week and then retrace pretty much the entire way by the end of the week. And so far, it doesn't really look like the case. So far, what we seem to be doing is, you know, creating that consolidation that I told you all about earlier, which was this, you know, pennant-looking thing. Okay, so very positive sign as per Bitcoin sort of buying up any volume or any sell-off sent its way. Okay, so the players who are essentially absorbing the supply right here are clearly bigger players, because they also realize that they're creating a structure that is showing bullish signs, which is, you know, bullish pennant. And no matter how much supply is thrown their way, which you can see is a lot, right? Look at the volume on this, and then this, and then this, and then this. Okay, what this tells you is that no matter how much volume is being sent its way, look, the sell side volume is actually going down. And guess what? Not only is the sell side volume going down, we're actually consolidating. Usually, okay, usually what it takes is just one big sell off, and then the price tanks like $500, $700, $800. But that's actually not what's happening right now, right? Okay, let's see here. Is it worth keeping an eye on the fib from 3K to 14K sitting just above the weekly? Yeah, so yes, I do agree that yesterday, again, if you watch my video, I did something like this, which was you need to start expanding to a bigger picture of how to look at the price action as an aggregate whole. You can look at this as 2 separate cycles for sure. Okay, this is your one cycle right here. Okay, this was your top of bull market, your retracement, capitulation, and then started a next cycle right here, which was your next, you know, bullish market right there, and then, you know, your next bearish cycle right there. Okay, so you can divide this up into something like this, which is, you know, bull cycle ends right there, and this half right here, and then this area right here was all, you know, your corrective bearish cycle, and then this was your. Let me actually make this a little bit cleaner, because I know that's looking very, very bad. Okay, so here's your top of bull cycle, right, from this whole thing right here. Okay, and then you have your bearish cycle right here, which was marked by capitulation. Okay, and then you have another bullish cycle right here. Okay, So we can mark that up right there. And then you have your corrective cycle right there. Okay. Now, again, I've stated many times before that I did believe that price should be coming back down to what was it, $5,000 to $5,500, right? And the reason I stated that was pretty clear because we have not seen large capitulation like we did back here. Typically, capitulation is usually what marks the end of bear markets, and it's pretty much the same in most markets, whether it's equities or commodities or even forex. Okay. The fact that we haven't seen this is why I was a little bit wary of the fact that this was the start of a new bullish cycle, and now we have to go up to 14K or 15 or 20K, right, or whatever people are saying. It's very possible that we simply move up towards 9 or 10,000 and then start maybe coming back down all the way to 5,000, 5,500. Now the question is, do I care about that right now? Not really. I mean, you just saw me. I have a long in and I'm aiming for higher targets, okay? So I'm not someone who really cares much about being right. It's rather, how can I make money off of whatever is happening in the price action, okay? So I really don't care if price ever reaches 5,000, 5,500. I'm simply stating the fact that capitulation is usually what marks the end of bearish cycles. Then you have a reaccumulation period, kind of like this, and then you have an upward move for the new bullish cycle. Now, it's very possible that if you start looking at these cycles individually and then you look at it as one large collective cycle, right? So once we start going like this, okay, so once I delete that and we start looking at this as a large bullish pennant, right? Kind of like that. And we are now still in consolidation. Okay, it's very possible that price somehow gets all the way up here to this area right here, which would be the descending trend line from 20K high to this 13.8K high. And then that'll take us to about 11.6, 11.7. And then we maybe come back down to all the way down here over the next couple months. And then start our new bullish cycle by the second half of 2020. Okay, I've also stated that yesterday, again, if you watch my videos, all right, there's a couple different ways where you can see the importance of Fibonacci retracements as per the previous cycles, okay, or just the importance of the golden pocket, which is the 618 to 65% area. If you retrace the top of the bull run, 20K to the 3.1K low, right? Notice on that next cycle right here, we went all the way from 3.1K to about 13.9K or 13.7, whatever high that is. Notice exactly where that is. That's right at that 618 fib, okay, which is a retracement from 20K high to that 3.1K low, okay? So keep that in mind, all right? Now we do something like this. So we go from that high that we had recently last June, about 13.8K, right? From that high to this low that we just put in last month. Guess where that takes us on that 61.8% area? That takes us to about right here, okay? About $11,100. Now we could obviously exceed that just a little bit and then hit this descending trend line that we're seeing. And that still puts us in that golden pocket area, okay, which is 618 to 65%. So you can see why I'm aiming for higher targets if they do come. But for now, I'm cautiously bullish, and I'm still aiming for that $9,000 and $9,300 area at minimum. Okay, at minimum, I'm aiming for that. Okay, so it's really not the time to be bearish given the fact that we've had such nice bullish movement. We've had nice consolidation periods right here with pretty significant volume. And then given the fact that the CME volume has been increasing, I just don't know how to be bearish right now. Okay, if things start to turn and we start seeing the demand structure right here keep getting hammered, then I might take some profit and walk away and then wait for the cycle to reset itself. Who knows? We might retrace all the way down to this area, $8,000 or $8,200, and then we might push out. I really don't see the point of doing that, but again, if you want to make a bearish case, there it is. But bearish cases right now, in my opinion, are far and few. I think it's much easier to be bullish. So, maybe consider that, okay? But that's pretty much it, folks. I think I've pretty much covered everything. I showed you guys, this large bullish pennant forming. I showed you guys, the individual cycles within this. I've also showed you guys this parallel channel that I've been watching for a little while, right? This channel right here, where we've had a bottom, a top, a bottom, another bottom where prices grinded against this area and then boom, took off. So if we decide to go up from here, that should take us somewhere around, $9,500 to about $9,700, okay? But like I said, my conservative targets are at least $9,000 and $9,300, okay? All right, that is it, folks. I'm gonna wrap it up here. Thank you so much for joining. And finally, we had one last question, which was the 200 moving average. And notice again, the 200 moving average is coming up right in this supply block right there. And that is currently around about $9,100 or so, okay? So like I said, that kind of matches my targets, my conservative targets of $9,000 and $9,300. All right? All righty. Thank you again. Y'all have a fantastic day. And again, come join the Cryptosomniac Advantage community if you're not part of it. 50% discount, $50 off. I'm sorry, $50 per month, and 3 month is $150. You can either pay by PayPal or crypto. All right, message me right here. There's a Discord link below in the YouTube video. And thank you again. All right, cheers.